Hello and welcome. My name is Gino Barbaro. I'm one of the co-founders of Jake and Gino and the creator of the Baby Money Soldiers concept. Now, in this week's Baby Money Soldiers episode, we're going to be discussing something really important. You've worked so hard to make and earn these baby money soldiers. How do we protect our baby money soldiers? Not many people like to discuss this. It's a pain point for a lot of us. A lot of us don't even know where to start. I know when I started making money, the only thing that I really truly understood was, hey, don't hold your stuff personally. Okay, great, but there's so much more to it. So let's dive right into it. I think the first thing that you need to understand as you're starting out on your journey in entrepreneurship, investing in real estate, starting a business, over the course of your career, you will probably get sued. Chances are. It's just become a litigious society. There's no way around it. So instead of complaining, like most of us do, myself included, let's protect ourselves. And a lot of these questions that I'm going to be asking and answering, they really end up with the answer of, it depends. Now, I'm not giving any financial or any legal advice on the show. What I would say to you is go seek a professional. Now, if you need somebody who can help you with entity creation, with estate planning, we work with Barth attorneys, the Jake and Gino community. I think they're phenomenal. If you need me to make an introduction, email me gino@jakeandgino.com and I will put you together with Paul at Barth Attorneys. They can set you up. Love the job, love the work they've done. They do a lot of great estate planning. They've got a lot of stuff with entity protection. But let's focus on that first thing, the entity structure. When I started out, my first property, probably the only thing that I did right in my first investment. Actually, at the time, I got an S Corp. LLCs weren't around. Holding real estate in an S Corp is not a good idea. Now, once again, I don't recommend doing it. Doesn't mean that you shouldn't. Go out and ask an attorney what's best, but really focusing on the entity structure with what works for your situation, for your life. If you're just starting out, putting assets into individual entities may make sense and it may not. I'll give you an example. When I bought my first property in Rochester, it was $60,000. My second property was $40,000. Now, would it have made sense to put those into separate LLCs when there was about $60,000 or $70,000 total of equity? Probably not, and I didn't put them into one entity. Now, when Jake and I started buying assets in multifamily, the equity was larger. Our very first deal, we bought Courtyard Cottages, boom, put it into an LLC. The next one, separate LLCs. And obviously, all of these entities have their own operating agreements. Really important. You need to have an operating agreement with an LLC. You need to follow the rules. So understand that you need to discuss this with an entity attorney for asset protection. That is crucial. The slogan that Garrett Gunderson says, he's been on our podcast. Go check out Garrett Gunderson on the Jake and Gino show. Phenomenal. He's written Killing Sacred Cows. He's written the new best-selling book, Money Unmasked. He says, insure for the catastrophic, not the consequential. We're going to get into that with the insurance part real short. But think about this. You may be saying to yourself, man, these LLCs, they cost me so much money for each one. Yes. But if you've got one property in one LLC, anything happens to that one property, it's protected inside that LLC. If you have 3 or 4 different properties with millions of dollars in that one LLC, then guess what? All of a sudden, they're all put at risk. So just be aware splitting it out. And another thing that I learned from our entity attorneys, if you've got an LLC and you've got a property in there, and you have any money that's being held from that LLC in bank accounts, checking accounts, that money is also subject. If you have a significant amount of capital, maybe you start another LLC and put that capital, that cash into a different one. Not saying you should or shouldn't, but that was actually very interesting. Another thing that we've run up against, one of our properties that we bought that's new, we're buying these new laundry machines. If it's a significant amount of money, maybe you want to split them out, put them in a different LLC from the property itself. They're going to be generating revenue. If something happens on the property and we get sued and we lose the property, well, the machines and the capital here does not get touched. Just food for thought, trying to be as creative as possible here. Now, as you start growing and the entities start getting bigger, you may want to go to a holding company in a different state, possibly like Wyoming or Nevada or Delaware, see how that structure works. Asset protection is the first thing that you need to do to start preparing and protecting yourself from issues coming from the outside that you can't control. Now, the next one is truly important. It's the insurance component. I have never met a person who has ever wanted to pay insurance. It's so painful. And then again, I've never met a person who said, oh, I'm thankful that I didn't get insurance when they've had an accident. So it's really interesting. You're worried, you think, you hope something doesn't happen, you pay the money for insurance. Let's pray to God something doesn't happen. But if something does happen, you are going to be so thankful that you have insurance and you have the correct insurance. In 2011 at the restaurant, it was August 8th in the middle of the week. It was a Wednesday. We had a fire, and thankfully I had the proper insurance. Was it expensive every year? Absolutely. We reviewed it every year, and it seemed like it was going up every year. But when the fire happened, the claim was over $300,000. We had business interruption insurance. We had insurance where something got damaged. They actually had to replace it and upgrade it. So I got new security cameras. I got a new fire alarm system put into place. I got a new hood put into place, new stoves in the kitchen. Everything got upgraded, new electrical, because that was part of the insurance. We lost hundreds of thousands of dollars from being interrupted. Like I said, that got covered by insurance. So beware to be able to get the proper insurance for whatever business you have. It's so crucial. We can list the bunch of other insurances that you really need. If you're renting an apartment, please think about getting renter's insurance. It's a couple $100 a year at the most. It's going to be able to protect you. If you've got a computer, if you've got personal belongings inside your unit, your landlord's policy is not going to cover it for you. If you have damage to it, your renter's policy will cover it for you. It'll also give you some protection if something happens personally. If somebody comes into your apartment and you have a dog and your dog bites that person and you get sued, it may get covered under renter's insurance. Next one is homeowners insurance. Homeowners insurance is crucial. I remember when I went to Italy, this is a little over 20 years ago, and I had a house in New York, and I had homeowners insurance on that house, and my luggage got lost in Italy. Some say got lost. I think they stole it. Dumb me. I loaded the luggage up with thousands of dollars worth of jewelry. I had some nice neckties. That luggage disappeared. My father's disappeared also. His magically reappeared 3 days later. Mine was never to be seen. I actually claimed that lost luggage on homeowners insurance, and they gave me $3,800. And I actually showed them, this is what I had in the luggage. This is what was lost. This was the value. And 2 months later, a check for $3,800 came by. Make sure that you have strong homeowners insurance. Auto insurance. We're going to talk about umbrella insurance. Life insurance. Your life is worth millions of dollars. If you are here no longer, who's providing for you or your family? Health insurance is another one. We have disability insurance, long-term care insurance. Now, if you need a connection with an insurance provider, we have multiple. We have ones that deal with multifamily. If you're looking for a property to invest, once again, look at that. For homeowners, I use Allstate. Allstate's done a pretty good job for me down here in Florida. I also use them for car insurance. Tried to use Geico, like them, but not a really big fan. Don't like the customer service. Look at all of your insurances. Once again, insure for the catastrophic, not the consequential. What do I mean by that? If your deductibles are low, my deductibles on my cars were $500. I raised them to $2,000 because I know if I'm going to get into an accident, I am not going to put in a claim for $1,000 because it's just going to raise my car insurance. So I'm insuring for the catastrophic. If something truly happens, $20,000 loss on the car, okay, great. You know what? I got $18,000 back as a buffer. I'm only losing $2,000, but that dramatically cut my premiums. So go through all of your premiums. Look at what the coverages are. Look at what your deductibles are. Remember, what you're trying to do with insurance, have this picture here. You are building a kingdom. You have a castle here. The insurance is the moat around that castle. It's truly protecting you and your assets. Now, if the moat is not deep enough or it's not big enough, what happens? The ability to get inside that castle is going to be a lot easier. So make sure you go through all those different insurances that I had just mentioned to you and go out and find a provider. Now, the last one that we can touch upon as you're trying to protect your baby money soldiers. Not so much protecting for today, but for protecting for tomorrow. Because I know if you're listening to this, you're a long-termism. You're a responsibility-minded. You're a hard worker. You want to leave impact. You want to create that legacy. Don't forget to create an estate plan. Over 70% of the people in this country don't have an estate plan. The other 30% do. The problem is that the 70% don't understand, even though they don't have a plan written down and a plan in place, they still have one. It's just with the state. Not a good idea. And you may be saying to yourself, yeah, I'm only 31 years old. I really don't have that much. I may not be married. I may not have kids yet. I may not have a lot of assets. You may continue to make those excuses. You still have something. If you've got life insurance, where do you want to direct it to? If you've got a child, have you created a last will and testament where there's guardianship? If you have an asset or two, do you have it in a trust, in a revocable trust? So if you do pass away, it avoids probate. I remember when I started my journey, early on, I'd gotten married. The first thing that I did was a living will and testament. And I did a healthcare proxy, did a power of attorney, started that all out. And as I grew, I sort of fell asleep at the wheel when one day my father was passing away and my mom was creating something called an irrevocable trust. No idea what that was. But I had seen that I started creating assets myself. And as my dad passed away, his assets went into that irrevocable trust. And that's when the light bulb went off for me. And I said, I need to start setting this up. Please don't wait to start an estate plan. And if you're there right now and saying, I'm overwhelmed, I don't have the time, unfortunately, it's one of those things that if something does happen, you're going to leave your family and your heirs in a bad situation. I do not want my children, after I pass away, to inherit a sum of money, and there's no rules or there's no laws, or there's no ways that I want it to be delivered to them. What happens is you create infighting. You create a problem. But if you're there talking to your heirs and talking to your spouse and talking to your children and saying, this is what I want to happen, I'm laying it out in an estate plan. I actually created one from Garrett Gunderson, wrote the book, What Would the Rockefellers Do? He's got in that book, he's got a great blueprint. I've created a financial plan for my children on books I want them to read, on the legacy that I'm leaving them. I'm not only leaving them money, but I'm leaving them the books and all that intellectual property that I've created. I want them to consume it. I want them to create a legacy and to become like-minded and to become responsibility-minded. But I also want them to pass it on to their children. So don't think that it's too early in your journey to start an estate plan. Wherever you are, contact the attorney, show them what you have, and ask them questions. What do I need? How do I need to be protected? Where should I start? Where do I have holes? Now, if you've created an estate plan and you haven't looked at it in 3 or 4 years, maybe now may be the time to revisit it with your attorney, because things change a lot in 3 years. You've got new savings accounts. You may have another mortgage on a property. You may have a life insurance policy that popped up. You may have more investments that have come about in the last 3 to 4 years. Have you updated it? Make sure you do that. So once again, it's so crucial to focus on expanding your baby money soldiers. We spoke about that on the last episode. On this episode, I'm trying to impart upon you how important it is to protect them. There are ones out there, people out there that are great at making money, but then they suddenly lose it. You've worked so hard to make the money. Start building the moat around the castle and start protecting your baby money soldiers. I want to thank you for spending part of your day with me here talking about a topic that's so important. We're talking about the present, but we're also talking about the future and creating the estate plan. Thanks for spending the time with me today, and I will see you on the next Baby Money Soldiers show. Take care, everyone. Thanks for tuning in. If you enjoyed today's video, be sure to like and subscribe so you'll never miss another episode.